with the integration of cryptocurrency, meaning that you can own actually asset and money online, with the integration of NFTs and crypto art. We are shifting into this internet of value. The Google and Facebook of the Web 3.0 will exist in terms of services, but you will access it very differently. And we want to enable our users to be able to monetize it directly.
Hello, everybody, and welcome to the latest podcast of Norman Alex. And today we're very pleased to welcome Jonathan Llamas, who is one of the founders of a blockchain technology company in Zurich called Verum Capital, and also the founder of the Vettery Global Foundation, which he's going to tell us a little bit more about. But perhaps you can introduce yourself a little bit for our viewers and readers beforehand.
Sure. Thank you, Ivo, for the introduction. As a background, I'm coming from investment banking, and I shifted my abilities to digital banking first, and then I moved on 5 years ago into blockchain technology, having founded a company which is called Verum Capital out of Zurich, about consulting and blockchain technology builder, and the Vettery Foundation, which is a non-for-profit foundation enabling users to secure, manage, and monetize their data in our marketplace.
Okay, and we've talked a lot in the past when we've met and when we've spoken on Zoom and on the telephone about digital identity and how that's going to evolve with blockchain technology. Can you perhaps explain what you mean by digital identity and also how that can be made safe in the internet and with the current technology platform?
Sure. I think digital identity is a very important concept and actually a piece of infrastructure for the new internet, what we call the Web 3.0. Why that is because the Web 2.0, the web that we're using on a daily basis, has been using till now at most our email addresses and some password to enable us to access their services. And I believe that, I'm not the only one, but a digital identity would enable much more to happen. And specifically because this Web 2.0, the Internet of Information, what we call, is fine eventually to manage with a low or a low level of security, in the sense that not having a digital identity is not a big deal. But in this shift of Internet of Value, what we call the Web 3.0, with the integration of cryptocurrency, meaning that you can own actually asset and money online, with the integration of NFTs and crypto art, we are shifting into this Internet of Value.
Sorry and to interrupt, but just to explain, NFT is non-fungible token. Perhaps you can explain a little bit what that is.
Yes, so NFTs are non-fungible token, meaning that this digital object that you will own will only exist in a unique form, just like a Picasso. It's non-fungible to any other asset. You can exchange it for its value if it has a value, but you cannot exchange it as in comparison to a fungible asset, which is, for example, a Bitcoin. If you own a Bitcoin and I own a Bitcoin, we can exchange our Bitcoin. It has the same value. So it would be on the other side of the spectrum. Yeah, we have also something in between, which are semi-fungible tokens, and think of it as the limited edition or limited series of an object, just as our phones, for example. If you have an iPhone, I have an iPhone, it's the same, but not the same. It has limited series. So those are semi-fungible. So in this context where we can exchange a lot of value, we need to make sure that you are the sole owner of this value. And this is exactly what blockchain, with the use case of Bitcoin, integrated with this technology. The concept of making sure that a digital object can be unique, cannot be duplicated, and can be associated to an owner.
So what does that mean in terms of my digital identity? Can I own my digital identity, and can I make money from my digital identity?
Yes, that means that for your digital identity, that means that we can make sure that there is integrity behind the digital identity that you own. You cannot fake it. You cannot alter it. And once we can do that, we can also make sure that all the value that you will own, that you will exchange, that you will transact with, will be associated with digital identity. Now, the way to do it, if we replicate what we have in the Web 2.0, it's very difficult because this ecosystem, the blockchain technology, but the Web 3.0 operates around the concept of no middlemen, behind the concept of not having users.
No Google, no Facebook to take my personal data and use them without me getting paid.
Indeed. So the Google and Facebook of the Web 3.0 will exist in terms of services, but you will access it very differently. What won't exist is that the business of, for example, Facebook, being able to take your digital footprint and resell it to data consumers. And this is exactly why we actually created the Vetri Foundation, is to enable users to make sure that they can secure their data, their personal data. They can manage it, decide what pieces of data is sellable and what's not. We know that we have a lot of sensitive data that we don't necessarily want to sell, some others that we would like to sell. And we want to enable our users to be able to monetize it directly. And today, Google and Facebook have created a monopoly. That's one thing, but a B2B approach of this business. And behind the B2B approach, we are never aware of what's happening with our data. This is why also we have created the concept of fair data economy. We want to make sure that whenever the data is being used fairly. And fairly means to us that you know what's happening, you're involved into the transaction, and you're the only one receiving the rewards for these transactions. And because today,
can you explain perhaps how your company, so how Vetri Global uses personal data, and how people can get actually compensated for that personal data?
So there's many components to that. The first one is blockchain technology, and why blockchain is because we want to make sure that we have data integrity. And a very simple way to understand blockchain technology without entering into technicalities is to understand that what blockchain enables today is to make sure that when I exchange something, let's say a picture, today, if I do that via WhatsApp, a Web 2.0, we will only create duplicates of this picture into our phone, but we will all receive the same picture, and we cannot know who's the owner of this picture. Blockchain removed or changed that in making sure that when you own the picture, you're actually the only one to be owning this picture, and we can track the owners of this picture. And if you take the concept further to not to picture, but to digital identity, to your digital footprint, or to money, cryptocurrency, for example, we can actually replicate all our industry activity with the banks, with all the services that we have access to in this model. How it works concretely is that we have created an app that you can download. We're live in the US. We're opening into in Europe with UK, Germany, and France this week. We'll open next week in Canada and Australia. And what it is let's call that a vault that only you will have access because we cannot access it. We use blockchain technology as our backend, and this vault will be able to access all your data which is in your phone. And it's located into your phone, and only you have access to it. What we do on top of that is that we tell the data consumers to come to the marketplace to, instead of buying this data to Google and Facebook, which is a pure operational cost to them, not only it's an operational cost, but also 50% of the traffic online is faked by bot. We tell them, you reduce the cost by 50%, and you give the money to your users. And by doing so, you will access a B2C ecosystem. This is what we call the peer-to-peer, but for now, let's call it a B2C. And we'll offer them the opportunity to transact directly with end users, being able to, for us, the end users, to start remunerating ourselves with our own data. With that said, we are already in contact with different type of partners that will enable the real use case about the monetizing your data in the US and in France, where we're going to be able to offer to our users to earn passive income based on the exchange of their geolocation, for example. They will enter into a shop, let's say Walmart, and they're going to be receiving money for that, just for exchanging this information. And again, instead of this information being exchanged B2B, it's going to be B2C.
Paid for in your own cryptocurrency.
Indeed. So this is our own cryptocurrency. 99% of our users today do not know anything about cryptocurrency, about blockchain. We have simplified the ecosystem and our app in a way that you don't need to understand any of that. You receive our cryptocurrency, but people understand points. So whether you want to call them points or cryptocurrency, it's the same. And we offer our users the opportunity to redeem those cryptocurrency or points for cash equivalent, which are PayPal and gift cards. So that's already live and that's happening every day. For those that understand that it's actually a cryptocurrency and they could exchange this cryptocurrency for any other crypto assets, you want to invest into the blue chip cryptocurrencies in the world, you could do that already.
What about you? How do you get paid for your platform? What's your revenue stream?
So our revenue stream is taken to the operational cost. Really, we work at cost for now on the fees, on intermediary fees, but our whole point is not to take major fees. Is that in having users to use our cryptocurrency, that will create a lot more demand for this cryptocurrency. And what is this cryptocurrency? It's our own cryptocurrency that we created 4 years ago now, with a limited supply. 450 million worth of this cryptocurrency has been distributed. We kept in reserve 100 million of this cryptocurrency, meaning that if, just as the Bitcoin, if everyone is willing to buy Bitcoin because there's limited supply of this cryptocurrency, the value will grow. And out of this value, we'll earn capital gain. And this is our economic model.
And can you just give me one example of how you see your technology and your platform evolving in the future? I'm thinking of financial services, for example, the fact that banks have a lot of very important financial data about their clients. Is that an application that could be of use to you?
Yes, actually, that's already on the table, and we're planning to launch this type of services by the end of the year. How so? We will benefit from 2 pieces of regulation which are live in Europe and starting also in the US. GDPR, of course, the data protection, and PSD2, which is the open banking regulation piece. What PSD2 obliges the banks to do is to make sure that if you are in Europe and ask your financial data to your bank, they have the obligation to send it to you. It's an obligation, meaning that with our tool, if you give us your name and the name of your bank, we can make sure that we have your financial data downloaded into your Vetri app. With that done, we can go to the MasterCard and Visa buyers, data consumers that are buying your data, financial data today already, fully anonymized, of course. We can go to them and tell them, like, look, stop buying to the aggregators and start buying to the end users. And that's a very easy way to do the same thing very differently, where we won't see the data. We'll make sure that your data is being anonymized, and you will make sure that you know when your data is being used. And whenever it's being used is because you've decided to sell it for a price that you will receive on your own. And we won't have to play any intermediary role in that relationship.
Jonathan, if you're successful, how do you think that companies like Google and Facebook and Apple will react?
That's a good question. And actually, that was our starting point. How can we actually disrupt them? In becoming a foundation, first of all, they cannot buy us. No one can buy us. We don't have any equity. The second point is that we know that if tomorrow Google and Facebook are starting to remunerate the users, they can do so and reap a big part of and a big chunk of the market because they're already the largest and the biggest. The one thing they cannot do is go down to zero, and we can. Again, our economic model could live exclusively on the capital gain and not on the transactions. So hard to say what they're going to be doing, but we can go down to zero where they cannot. First of all, they cannot buy us. And again, the future for me is really to provide the ecosystem to the users, meaning that our vision in the next 5 years is to dissolve the foundation itself, making sure that our token holders, the one using and being part of this ecosystem, are the one deciding for what's best for the ecosystem, meaning that they will receive also voting rights to decide on the governance on how this entity should be managed and governed. And that's for me the future. And that's something, again, Google and Facebook, because they have shareholders, because they have to generate benefits every year, cannot do. So most probably both model will exist, but I think ours is more sustainable and more in line with what the future will bring.
You mentioned the word sustainable, and a lot of people who maybe don't know very much about the blockchain sector, they think of cryptocurrency mining and the energy consumption, and people think, wow, if your ecosystem works, it's going to take up a lot of energy and it won't be ESG compliant. Mm-hmm. How do you reply to that argument?
We need to educate the people to understand that if that was true for the first blockchain ecosystem, which was for the Bitcoin, which is still for Ethereum today, we do not need to run all those operations on the energy. We have changed the way we validate and we secure the blockchain ecosystems, changing from proof of work, which are the Bitcoin way of mining Bitcoin, consuming a lot of electricity, into proof of stake, which instead of requiring a lot of energy, we require the user to put some collateral on the site. Okay, we stake some money, and we do the same operation to validate each block. Whenever you validate correctly, you're rewarded, just as in the proof of work of the Bitcoin. Okay, if you approve a wrong transaction, then you're just being taken your collateral, and we have disincentivized the mechanism of doing so without having to run a lot of energy. So this was an issue. It's not an issue anymore. Most of the newest blockchain solution are run that way, and we have even more creative ways of running this operation, not ruining the planet. So I think that's very important.
Okay, well, that's fascinating stuff, Jonathan. Thanks very much for sharing those insights. And we'll put your contact details and a link to the website of Vettery Global at the end of the podcast. And thank you very much for all the information you shared with us.
Thank you for the invitation. I hope that was helpful.
Very much so. Thanks very much. Bye.
Thank you. Bye-bye.